If you look at the markets and feel like this, don't worry, because in today's video we are going to talk about supply and demand trading for beginners to advanced traders. This is Trading 101, a series where I teach people everything I know about the markets and I use on a day-to-day basis in order to take money from the markets and make money myself. Supply and demand trading is one of the most popular strategies when it comes to trading and easily one of the most basic fundamentals when it comes to trading. And if you don't know anything about supply and demand, don't worry, because I will go in depth with every single concept I know and every single trick you need to know in order to trade it profitably on a daily basis. So I would say without further ado, let's go into the next page. And I would say we start with the first concept of supply and demand trading, and this is a supply zone. A supply zone is basically a strong zone for selling, and I would say we start out by talking about the supply zone. This is one of two zones, obviously, we can use. Oh, I got a little bit too far there, guys. One of the first zones we can use in order to make money, okay? And the first step to do that is that we need a strong move to the downside. In the example I draw here, you can see we get a strong move to the downside. Can I erase that? Maybe we get another color here. Maybe we can get a like... Yeah, blue works, I think. Blue works, okay. So as you can see, we get a strong move to the downside. So the second step is we then need the move to cause a break of structure. Guys, if you don't know what a break of structure is, it's basically when we get higher highs and higher lows and the market breaks one of the highs or one of the lows. This is basically a break of structure, okay? Really basic guide. Maybe I will make a video on that in the future. So just for now, so you know what we are actually talking about, a break of structure is basically right this, okay? So let's look at the first step we need in order to make money off of a supply zone. And this is that the price needs to come back into the zone. Obviously, with any point of interest you're trading in the markets, it could be a fair value gap, it could be a supply and demand zone, or it could even be like a support and resistance zone, right? We need price to come back into the zone in order to trade it properly. And as you can see in my example, price reaches back into the supply zone, right? Pretty simple. Obviously, price needs to come into the supply zone so we can entry off of the confirmation, which is our final step. And don't worry, we go in depth about the entry models just a little bit later, guys, okay? So for now, this is a supply zone. As you can see, we get a strong move to the downside, which has caused a break of structure right here. This is the previous low, okay? And then price comes back into the supply zone, rejecting it in any type of way, like we entry off the confirmation. We don't entry if the market is going like this, printing big candles at the supply zone, or even going beyond the supply zone, okay? That will make the supply zone invalid and we don't want to see that. So price needs to give us clear signals that it wants to react to the downside. And then, obviously, market will continue in our direction. Hopefully, guys, it won't work 100% of the time, but if you're doing it right, it can work the right amount of time, paired with the right risk to reward ratio, gives you nice profits, okay? So I would say we then go on to the next page. And this is trading the demand zone. A demand zone is basically the opposite of the supply zone. It's basically the buying side of things, okay? So we need a strong move to the upside, not to the downside anymore. We need a strong move to the upside in order to trade the demand zone. And as you can see, we get a strong move to the upside right here. It also needs to be very clear and visible for you guys. If you look at the charts, it needs to look very, very obvious, so you know what you can trade and what you don't want to trade. For example, if the market would go up just a little bit above our previous high, this is our previous high, it goes just a little bit above before coming back down and doing like this, we don't want to see that. We really want to see a strong move. And as you can see, we break the previous structure point, obviously, so we can check off these little steps. We got a strong move to the upside and we got a break of structure. The third point is, as always, we need to wait for price to come back into the zone. You don't want to trade here, you don't want to trade here. No, you want to trade when the price is inside our zone. And as well, we need to wait then for confirmation in order to place a buy position anywhere in this area, okay? So we then go on to the simple idea on why supply and demand trading will work, okay? Or basically the idea why it could work in your markets, okay? So it's basically an area where a lot of people have bought previously. As you can see, this strong move to the upside doesn't happen because someone decided to, right? There is obviously a lot of buyers down here which caused the strong move to the upside, or maybe one or two strong buyers. Example, banks or hedge funds, okay? They caused this strong move to the upside. And this is where we can profit from, because when a lot of people stepped in at one point in the market, it's most likely that they or other people would get in at the exact same level once the price comes back to it, okay? So as you can see, we have people who couldn't get in at this level looking to buy. This is right here. People who couldn't get in on this move, obviously they missed out, they are mad, they are frustrated, they want to get in once price comes back into this level. Or even the hedge funds and banks could say, no, we don't want price to go below this level for the current time, we want it to actually go higher, so we wait just a little bit and go in again. Also, where are the stop losses of that people who got in at the zone? They are right below the zone or even inside the zone, guys, okay? So a lot of liquidity laying into the zone. I can mark this out with a green candle. Wait, just give me a... There is a lot of liquidity laying right here, okay? So what we want to see is price coming back, obviously, as I mentioned, and then also get in with the big players and other players inside this market. Also, as you can see, we got a lot of people who are trying to sell at the top of the move. People who got into this move earlier could go out as we reach higher prices, right? Obviously, they want to make a profit, so they sell their positions. And when people see that the market is falling down, they are most likely to sell pretty much as well, okay? So a lot of selling momentum coming in at the top here, causing price to go lower to our zone, okay? And this is where we really want to look in and try to buy the market. So we want to look here in order to sell. I hope this makes sense so far, guys, because there are a lot of people interested in this area and buying or selling the market, because the people who sold right here, they need to take their profits as well. So where are they going to take their profits on a logical basis? Right, they're going to take it down at this level. Not all of them will do that, right? Most people maybe have trailing stops, they go out anywhere here. Maybe some people already close here and the market never reaches the zone and it goes higher. There are so many things going on. So all you need to do is have some patience. And if the market doesn't come back into your supply or demand zone, you just need to wait for the next. There is no need to rush in these markets, guys. There are setups each and every day, multiple setups on every single zone, on every single pair, so you have enough time to decide which pair you want to trade and which pair you maybe don't want to trade, okay? And even if you don't take a trade for today, like take it slow, I write it down, it's so important, take it slow, okay? You don't need to rush in the markets, you don't need to hesitate or anything or get in because of FOMO or greed. You have unlimited time to learn the skill. If you're still young, maybe even if you're 30, 40, 50 years old, you still have so much time. Give it 4 years, 3 years to learn this. But don't switch things up and really try to learn this. Don't be greedy, it will only ruin you, okay? So with that being said, I would say we go into some examples of a supply and demand zone so you can have a better understanding of it. This is an example of my charts which I actually draw down into the New Zealand dollar, US dollar on the 15-minute time frame. And as you can see, we get a strong, really strong, and this is a beautiful move, right? We get a really strong move to the upside, causing multiple break of structures right here, as you can see, and obviously the higher break of structure right here as well. So I got really confident when I saw that, right? We got a really good and strong move to the upside. This shows me that there are a lot of buyers and strong buyers at this level. This is almost like a skyrocket, right? The price pretty much just went up and up and up. And at this point, you maybe thought, okay, I go long. A lot of people make the mistake actually, and oh, the market went up so high, it skyrockets now, and they actually buy right here. What ends up happening, the price goes obviously down a little bit, because all of the people who made a nice profit on this move are going to sell, right? They are going to sell right here. And if a lot of people selling at a level, what happens? The market falls. You need to understand that the market is not driven by any algorithm or any special metrics like thing. It's actually driven by the people. And once you understand people behavior in the markets, it's pretty easy to understand what's going on, right? The market went up so high, people get anxiety, they want to get out, they are scared that the price will fall in the fast pace it went up previously. So what we then can do is just be patient and wait this whole period of price going down out in order to buy again at this type of areas when the price comes back into our demand zone. And oh, what a wonder, guys, this is not any secret, this is pretty simple. And as we can see in this candle, it has a long wick, right? Let me delete this actually. Let me delete my drawing. It has a long wick. Can you see that? Price reached into the zone. And buyers immediately, without any hesitation, push the price back to this level. This is also the level where the previous wicks were, okay? So this is an area of rejection, actually. This is an area of rejection. Price grabbed the liquidity of those orders of the people who bought here and here and here. They stopped them out and used that liquidity to fill huge buying orders again. So what you could do is open up a long position right here. Because you saw the strong rejection wick, you can buy right here. Put your stop loss just below this very strong rejection candle and take basically the profits, right? You can exit at this level, which is a logical level, or you can even say you exit at this level. I will always use previous points of structure in the market to exit my position, right? It only makes sense that at this level, other people are looking to sell as well, okay? So I'm going out here, made a nice profit, and you can even, guys, what I do a lot of the time, when the price comes up, maybe let's say 50% of my initial take profit level, I just put my stop loss to break even. Let me get another color for this. Maybe we can get like this. Wait, can I grab it? Hello? I will get this. I will put my stop loss where my entry is. So pretty much what happened right now, I have a risk-free trade. Even if the trade goes against me and stops me out, I pretty much lost nothing, okay? In trading, it's all about letting your winners go as big as they can and stopping your losses out short. And then when you made a nice profit on this move, you can actually see price going down pretty much really aggressive, okay? This is usually not what you want to see, but as I saw, price rejected with this wick. Let me erase it really quick for you guys so you can see it a little bit better. As you can see, price did the same thing, and it's so simple. Price did the same thing, a long wick to the upside again. So we are rejecting at this level once again. At the next candle right here, these are two candles, is rejecting the level just as strong as the previous candle did. So this pretty much is the same thing. It's simple. Okay, so you don't need to think a lot about what's going on. You just need to make the right decision at the right time and be patient before you do anything else. So we then can pretty much do the same thing, open up our long position after the blue candle closes, right? A buying candle closing strongly to the upside, putting my stop loss once again below this level, and then pretty much going out as well on the previous market structure points, right? Pretty simple as well, and you again made a nice profit, and just because you got really patient and really careful into it. So let's go actually at another page and I will show you guys how to entry, okay? Okay, so let me show you guys how to entry, okay? It's basically pretty simple. We have three types on which we could entry, okay? So let me draw a supply zone real quick, demand zone, sorry. let me draw a demand zone right here. We have a nice demand zone, and let's say the price is coming back to the zone. What we need to look out for is a rejection wick. This is actually the first type of entry we can use when you see a strong setup like this. For example, if we go just back one page, you can see that we have a strong move to the upside like this, and this is where we want to entry pretty much really aggressive. So this would mean, let me get another color for this. Let me get a green and nice color for the buying entry right here. So what you want to see is price to come into the zone and closing back pretty much at a higher pace, right? So we have price reaching into the zone and closing strongly above the zone. What you then can do is enter the position at the close of the candle, just entry right here. So this is the first entry type, and it's called break, not break of the candle, sorry, that's another one. It's called actually the rejection wick. So this is a pattern I use pretty much every day when I see a strong setup, of course. Rejection wick, okay? This is the first entry setup on my list, and I look to entry in this type of way when I see a strong move in the first place. So this needs to follow from a strong move, right? Okay, pretty simple. We discussed this. Now let's move on to the second entry. So for our next entry, this is actually where the fun begins, because this is the break of the candle, okay? So let's say once again, we have a strong move to the downside right here. So we can then mark out our previous supply zone. So we have the supply zone right here, supply zone right here, and we want price to come back into the zone and break the candle. I write it down here, break of candle. This is basically a two-step confirmation following the rejection wick, okay? So let's say price comes in here and makes a nice wick and a nice candle, but this is not as strong as the rejection wick, right? It's basically just a normal candle with a little bit of rejection right here. What we then want to see is a red candle following it pretty strongly. And what you do when you see a candle getting printed like this, you entry right here. This is where you entry. So you observe the markets very closely, or even put a limit order down and entry pretty much right here when we break the candle, so you get a better risk to reward ratio. For stop loss, obviously you're going to target previous structure points. If there is like another one right here, you could also target that, or work with multiple stop losses and take profits, right? I recommend, as always, to adjust your stop loss over time. So when the market goes down here, doesn't hit your take profit and goes all the way against you, you don't lose anything, okay? Pretty simple. So let's move on to our last entry criteria, which we can use in order to take an entry into these markets. And this is basically a candlestick pattern. I know a lot of people are saying candlestick patterns don't work, candlestick patterns are a scam, and to some degree, I understand them, because you can say a candle gets formed pretty random. But I can't agree with that, because a candlestick pattern, let me write this down. Candlestick pattern is actually a good thing made by us traders, right? So the third entry criteria is a candlestick pattern. Let's say once again we have a strong demand zone right here, okay? This is the demand zone. And we can see that price is reaching this level. What we want to see is a candlestick pattern, okay? Let's say you get a hammer candle. What does a hammer candle also indicate to you guys? Just look at this candlestick for a second. What does this also say? It's also, of course, a strong entry type 1, rejection wick, right? Rejection wick. It's also the same thing. And we can also look at a bullish engulfing. We have a bullish candle, a red candle, sorry. Let me get a red color of this. So this is now our red candle, okay, sorry for the bad drawing, guys. Followed by a stronger green candle. A bullish engulfing, if you don't know the pattern, is basically a red candle followed by a bullish candle which is closing above the candle's high and not closing below the candle's low. Okay, so the buyers in this period are showing that they are stronger than the previous period's sellers. And I think it's pretty simple to trade off candlestick patterns. Actually, I think they're a good thing in the markets because they can't hide anything, okay? The markets can't hide what happened in this given period. So if we see a candlestick pattern like this, it's pretty obvious that the buyers are right here stronger than the sellers before. This is just the truth. And if you say candlestick patterns don't work, or they are a lie, or they are made by the market manipulators in order to take our money away, it's simply not true. The markets cannot hide simple price action, because in fact all the markets is showing us what price did in the past, right? It's pretty simple. It's showing us what price is doing right now and what price did in the past. So this is pretty much how we entry. We have 3 entry patterns. I can write them down on one page for you so you can screenshot them. I recommend also that you maybe write something down so you don't forget it. But in fact we have, let me get a white color for this now. In fact we have the rejection wick pattern once we touch the zone, and let's just call this a rejection wick, right? This is our first type of entry. We then have our second type of entry, which essentially is the break of the candle pattern. So let's say a candle comes in here. This is a bearish candle. I marked this out like this, a bearish candle, and then we get a bullish candle following after it, pretty much a bullish engulfing. This, you can say, is also a candlestick pattern, and you're right with that, okay? So this pretty much we could also get an entry which is all three. If you get a hammer candlestick like this, followed by a strong bullish candle, this is also called a break of structure, also a candlestick pattern, right? Let me delete this so it's pretty clear. This is our second entry, a break of the candle, okay? And then we can move on to our third and last entry, which is basically a candlestick pattern. For now, let's use a different candlestick pattern. Let's not use the bullish example as before, the bullish engulfing example as before. Let's actually talk about a bullish Marubozu candlestick. A Marubozu candlestick for the bullish and the bearish side is basically a candle with no wicks at all, okay? So you don't get a little wick to the top and no little wick at the bottom. This is just a bullish Marubozu candlestick. And this is a candlestick pattern entry. So you have 3 steps to entry off of the markets. And let's go back just a little bit here. In our example, you have now 3 steps in order to entry off the markets, which is pretty simple once you spot a supply and demand zone, which is also very easy to spot if you are patient and wait for strong moves like this to happen, okay? So with that being said, guys, I hope this video helped you a lot. If you have any further questions, write them down in the comments, and also leave a like and subscribe if this video helped you in any way. And I would say we see us again later.